All right, good morning. Testing, testing, 1, 2, 3, testing, 1, 2, 3. The rain in Spain falls mainly on the plains. The ants in France stay mainly in your ponds. Hang on, I don't have things quite set up properly. Can't see the chat. Hang on. Where'd it go? I think I gotta click on this other thing. Won't let me click on the other thing. I don't see chat. The editor won't change. Why is it doing this? Okay, hang on guys. I'm gonna have to manually bring up the chat. Strange, it's not bringing it up. Hang on. Okay, it says we're okay over there. Hang on, I have to pop out the chat. I got everything in the way. Hang on. Hang on. I know it's terrible. Hang on. Maybe if I do this, and then I move this. I gotta get that out of the way, and then I gotta get this out of the way. I gotta move this over. That gets me to the chat. Hang on, it's almost done. And I go pop out chat. All right, I think I can live with this for today, and hopefully tomorrow it will be normal. Almost done. Move that over there so I can see your chats. Move the studio over there so I can do all that. Almost done. Good morning, by the way. I'm going to move that over there, and I think we can go. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. So, hello, my name is Wayne McDonald. I am the Chief FX Market Strategist for TradersWay.com. Thank you very much for being a client. We appreciate you. Thank you very much for the loyalty and respect that you show me every day. And we hope to earn your business. So, thank you very much for having a demo, or thank you very much for having a live account. Thank you very much for being part of the family, part of the community. And I wish you the best of success. A little tired. I was surfing on the weekend. What were you doing? Surfing. Let me tell you, I'm not as flexible as I used to be. I'm like, whoa. Whew, that Super Bowl, huh? Just barely got that in. Hope your swings are going well. A nice calm Monday means not a lot of craziness, which is great. Craziness is not good for swing trading. Great non-farm payrolls. I hope you attended that on Friday at the FX Street YouTube channel. Hope that was great. Happy New Year, but I think that's not till tomorrow. I guess, well, today is Monday already, so I guess it's what, 9 o'clock at night? So yeah, I guess tomorrow. Is tonight New Year's Eve then? So I guess maybe that's it. Maybe tonight is New Year's Eve. Cool, that's interesting. I still don't know if I'm going yet or not, so we'll see. But anyways, Happy New Year's. So anyways, lots going on. Has anything fundamentally changed? No, not really. So we have to keep our eyes on the market. The market is quite mature. We're at key levels where if you've been bullish for the last 3 weeks, a bear might show up, that kind of stuff. Like we're at turning points, but nothing has to turn, but it probably will turn, or at least might turn. So it's one of these things where you just have to keep doing what you're doing and then but be aware that it may not work for much longer. Yeah, I look, thank you, Cohen. I look sleepy. Yeah. But yeah, surfing with the kids and stuff. It was a good sort of family weekend. So we had a good old time. All right, so anyways, let's move into the chart. So I have WTI here, and I got a big long thank you email. I think it was from Non-Farm Payrolls, where I talked about using the EIA and OPEC websites and their reports to do analysis so that you don't say something stupid like, I think, or I'll bet you, or whatever, like, I think this is going up, or I think it's going down. No. What matters is like your evidence, right? The methodology of your analysis. If you have an opinion, nobody cares. That's what I was trying to say, that if you want to have a value in this market, you have to have analysis, not an opinion. So anyways, I got someone, they sent me a big long email, and they actually went to those websites and did some good analysis and came up with some good opinions. And great, right? Fantastic. It was really good analysis. So to add on top of that, one of the things that you might want to do is go to, let's say, Exxon, Shell, and Chevron websites. So I did this back in my my Harvard research of the oil industry. If you go to their websites, once or twice a year, they release very, very detailed reports, sort of like the world outlook or the world demand or whatever, the global research of supply and demand for oil from their point of view. And it's also very, very, very educational. And of course, you could read their annual reports. Their earnings just recently came out, so you can look at that. But really, go to their websites and look at like I remember it was Exxon. I think it was Exxon. Their CEO or one of their big shots came out and did like a big long webinar and did some Q&A, and then they had a big PDF with lots of charts and stuff that came out with it. It was really interesting. So you might want to consider that, put that in your cap of things to do if you want to be an expert in oil. Now, the interesting thing about specializing in oil is it is a global product, and we are global traders. There really isn't any difference between a barrel of oil and a barrel of euro. I consider oil money. I consider gold money. Diamonds are a lot less liquid, right? You still have to find a buyer, no matter how nice your diamond is. You still have to have a buyer, and then you have to negotiate some sort of price. And then there's a market price. Well, what market? And is this diamond at a market price, or is it a collectible? Is it, there's negotiation, right? You can't walk into a grocery store and say, here's some milk, here's a diamond. Can I have the change? They're like, sir, this is a $4 million diamond, and you're buying a jug of milk. We can't. But you might be able to do it with a bar of gold, right? Go to the grocery store, buy some eggs, milk, and bread, and say, can you break this gold bullion? Well, even that's not quite liquid, right? But oil is actually liquid, but oil is oil, and it's such a commoditized product that there are different grades of oil and such, but you can just enter it into the oil market and it spits money back out. Okay. Hey, yeah. Anyways. So put that into your research if you want. And what I was also trying to say is the upside is you end up doing a lot of macroeconomic research when you're looking at oil. So like demand is low in Europe, and demand from China is less than expected, and then oh, the Americans, they're fracking, and Saudi Arabia is scrambling, and there's all this research, but it gives you a good overview of the world, right? So maybe just there's something for you to study. So like I took a class and read thousands of pages and wrote 12 papers. That's what I did to sharpen my saw regarding WTI. So here we are now, and it's not bearish. Okay, that's the thing. So it's not a good buy. It's a terrible sell. So what you kind of get in that situation. What do you do, right? And do you have an answer for that? What do you do where you're like, it's not a great buy, but you certainly wouldn't sell it? What would you do? Well, contingency plans, right? A bull would still want to try to that. A bull would probably still try that. Does that mean a bear would sell this? No, but a bear would find it interesting to be down here, wouldn't they? What would they do? They would sell that. So that's, and of course their plan A would maybe is a double top and then a drop, and then right? So bears should have plan A and plan Bs. Plans A's and plans B's, or just plan A's and plan B's? I guess plan A's and plan B's, and vice versa. So set it up. Alejandro says, yeah, or you can scalp. Yeah, scalp while you're killing time, right? But you could always do that, right? What do I think of modern monetary policy? Well, that's been around now pretty much as long as I've been a currency trader. So the modern monetary theory is closer to, let's say, the dot-com crisis, and then the next crisis after that, and then this crisis has all been coming along. Part of that is inflation targeting, which Bernanke wrote a book on that. Somebody else did. And so when I first started trading, things like having an inflation target, I think the Fed had one, and I think like the other central banks gave them, but would never admit that that's what it was, that their guidance wasn't actually an inflation target. So that was all taboo. Before Bernanke, you had Greenspan, and Greenspan was old school. So Greenspan would do a press conference, and you had no idea what he just said. And then the talking heads at CNBC and Bloomberg for the next hour or the next week would interpret what Greenspan just said, like he was speaking a different language. Well, that's old school, right? If you have to discuss what just happened, then and try to interpret what he just said, then it's not really transparent. It's more opaque. If you go all the way back to, let's say, Paul Volcker, they didn't do any press conferences, and you only knew the Fed raised interest rates after the market moved. And traders would go, oh my God, I think the Fed just intervened, and it was always a shock. Okay? So here we are now, where we have lots of meetings. The Fed just moved under Powell to have a press conference with every meeting now. So now there's 8 meetings and 8 press conferences. So they're doing their best to be as transparent as possible. That's a big part of modern monetary theory. But then this idea of spending the government spending during a financial crisis. Well, that goes all the way back to Van Hayek and Keynes. John Maynard Keynes, right, said, spend your way up. That's what he said. The government should create the demand by spending money. His nemesis was Van Hayek, who the British loved. And maybe that still right? Maybe that still hangs around our monetary cultures. But it looks like Keynes is better off to the modern economy. The only problem is governments, they don't understand that during the good times you're supposed to save. That's the part that they're ignoring when it comes to Keynes. Keynes said, when times are good and the economy is booming, you're going to be making lots of money on taxes because lots of people have jobs and businesses are making lots of profits. So your tax payrolls, if you will, should be high and the government should be making a lot of money. You should pay down your debt and save in anticipation of the next drop in the business cycle. And then when the business cycle drops and customers go away and businesses go out of business, you create a new demand through spending, and you did it with all the money you made during the good times. Well, right now what we do is we just go boom, 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 boom. Yeah, well, Chuck, if you say it like that, then there's like hyperbole to it. So, so yeah, I wouldn't go that far. I wouldn't go that far. But most likely, that's coming from, I don't know, left wingist or right wingist or whatever. That's a hyper marketing ploy, paper or point of view or something. But that's not truly what it would be. Yeah. Remember, if there's anything like hyped up like that, dumb it down and look at what it would be. Like, think about the guys at the Fed. First of all, they're nerds. And second of all, they're very hardcore dedicated to the numbers. These guys are not extremists, except for their dedication to economics, right? These guys are scientists. So there's not a lot of radicalism except for maybe work ethic. Okay, so yeah. Cool. Okay, whatever. So let's go through our analysis. And by the way, I want you to start to develop this attitude of your job is first and foremost to be an analyst. So right now we're just doing our work. What does this mean? How could it impact my bias? Where are we in the short-term cycle? Where are we in the longer-term cycle? Should I be aggressive this week or this month? Should I be conservative this week or this month? And that's the basis of analysis. And you go through all of that first before you even decide to buy or sell. I think there's still a lot of people here that log in and they just want to trade. They want to find the next trade. That's poverty in action. You have to do your job first, right? The fun part is trading, but you should spend about 80% of your time waiting and 20% of your time setting up trade plans. Only 1% of your time really, so we'll make it 19% of the time as you're doing trade plans, and 1% of your time you're actually trading. Okay. So anyways, so when I look at something like this, you have to say, well, this doesn't look very bullish. And we're kicking off a bullish pivot. Okay. And you can see up here, I have this as an old target. So there's a lot of resistance up here. And it's not surprising for us because we have done our analysis. Yeah, well, Thuso, thank you for your honesty, by the way. That's helpful to you for sure. When you look for trades, you'll find it. It's like shopping while you're hungry. Okay? So you got to be careful. Remember, your job is to make money and manage risk. Right? The only people that get paid to trade are brokers. That's why, with my relationship with Traders Way, I'm very sensitive to the idea that, of a broker getting, let's say, unskilled traders to trade more because the broker will make more money. I'm very sensitive to that, and I always have been forever. So that's why I don't ever give you rah-rah speeches like, let's trade more, let's trade more. What's the better model on the long run for if I'm going to be an intermediary for the broker on one side and for the trader on the other, is for you to be profitable. You see what I mean? That is the winning formula for everyone. If you can trade profitably because you have truly a skill, then you're going to grow your account size and your assets under management and your lot size, and a broker will have a very happy, satisfied, successfully profitable and skilled trader that can trade for years and years and years and years and years. Right? So I'm actually saying, be careful. It's easy to find trades, especially if you're looking for them. You will find them. That's how our mind loves patterns. The human mind loves patterns to the point that we'll make up a pattern. Okay? So that's why I say I want you to spend most of your time doing analysis, and then a lot of your time doing trade plans, and only a very small part, pulling the trigger and moving the stop. Most of you guys don't have 100 trades open. Most of you guys have 5 trades open or less. So that should be a very small amount of your time. Okay? So anyways, we're looking at this, and a couple of people said they're short this already. Okay, but the problem with that is you're selling and as a bear, and bulls are actually the ones selling this. So this is not a bearish market, and you're short. So that puts you in a danger zone. So you might be making money, but it's a very dangerous, very short-term trade, I would say. So let's say on a 15-minute chart or less, okay? And that's really good on that situation because, we have a take profit zone up here, and then you sort of have a double top there on a smaller time frame, not on a 4, which is fine, okay? So that's fine, except I don't like that type of trade. But it's legit, okay. But that is still a bullish market on this smaller time frame, okay. And we're talking about here's 1 month, and now we're in a new month. So based on everything in January, right? So look at this. Let's just analyze what happened in January. Okay. Does this look bearish to you based on what's happened over 4 weeks? Mr. Naively, if you spam one more time, I'm kicking you up forever. So you've been warned. Be cautious. Okay. All right. So that's okay. Now, does this mean you can't be a bear here? You definitely can be bearish. You have permission to be bearish. I'm trying to change the color here. Right? You're at the right price and at the right level and for the right reason. I have no problem with you being a bear here. The problem is on a 4-hour chart, it's truly not bearish until you have something more like that. You cannot be bearish in a bullish market unless there's a reversal pattern. And you might say, well, Wayne, this is the reversal pattern here. Okay, on a 15-minute chart, but on the 4-hour chart, where's the reversal pattern? Maybe you back out and you're like, well, that's my reversal pattern. Okay. Okay, that's fine. That has to be part of your analysis. But this is still the safer trade in the reversal. Remember, the double top is playable, but what's preferred is the 1, 2, 3. The 1, 2, 3 is always going to be basically the same amount of pips, but significantly less risk. So whether you count this as the double top or this and the previous thing as a double top, right? That's only 1. Okay. The 2 is the lower low. Okay. Previous to that, let's say. But the trade still hasn't happened. The trade is the lower high at the roll reversal. Okay. And you're taking significantly less risk and you're giving up this many pips, which on the long run is nothing, because if you blindly take a lot of higher risk, low reward trades, you're going to give a lot of that back, right? Cool. Now, on the smaller time frame, so here's 2 weeks ago, up, down, down, buy. A week ago, up, down, down, buy. The next thing is you can still be a bull. and you're going to look to buy somewhere around here. Okay? Now here's the interesting thing. As a bear, wouldn't you be happier if it did this? The answer is yeah, obviously, because now you have the bigger, let's say, macro double top. And then you've slaughtered all these bulls. There shouldn't be any bulls left because of the macro double top. Mac double top, and micro double top, which is this one. Okay, and now you got multiple time frame potential reversal, and then you'd look to the stock market and see that the stock market is falling and bond yields are falling. So therefore, okay. But until that happens, I'm not playing it. RJ took it? Yeah, it makes sense. Okay. But you have to, depends on how you did it. So if you already did it, then you took this one, which is great. That's fine. But you're making a lot of calls like the stock market is going to fall. And then you say, well, the Fed just told us they're not going to raise interest rates for a very long time. And what did the NFP say? Well, I suppose you can interpret NFP a couple of different ways. So really, just as long as you're trading your bias. Thank you, Gisa. Appreciate that. Sold on Friday. Yeah. Great webinar already. Thank you, guys. Thank you, Moccasin. Make sure you guys leave the thumbs up, or even better, I would appreciate comments. Right? I love it in here, but if you can post to hey, I love your webinars. This is fantastic. Right? Then everybody involved, Forex.Today, Traders Way, everybody's involved. They know that you appreciate these webinars, and they'll keep them going. Pharaoh, does Aussie and gold still have a correlation? I don't know. Do the research. Yeah. Go find out. Right? I don't have a full-time quant on my staff anymore, so I don't have that. I'm just a humble college student. So over the weekend, my wife sees me kind of daydream, and she's like, "Are you okay? Did I say something wrong? Did I'm like, no, baby. I was wondering if you take the square root of the variance, and that becomes your standard deviation. Why do you have to square root the variance to get that? What's going on in the math there? Is it because you might have a negative variable where you have a negative 11 and a plus 12 and a plus 44, and you're trying to come up with a standard deviation, and so if you square it, you'll always get a positive number? Is that what's behind the math?" And she said, "Oh, well." Yep, that's my man. No joke. She's like, "Oh, okay, yes. Well, if you do take the square root of a variance, you would always get a positive standard deviation. That is true." So anyways, yeah. So this is what I do while I'm surfing. You should see me in my my surfing gear. I look like a hot water heater. Right? I have the body of a hot water heater, round and white. Like, oh, look, a hot water heater on the beach. Anyways. So anyways, cool, right? So how are you going to trade this? Let's say you wanted to be a bull. Should you be a bull now? Well, like you might be looking at this, like, oh, I'm thinking about being a bull, and I want to be a bull, and I think the Canadian dollar is going to fall because I think oil is overvalued, and blah 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 blah. All of that might be legit. That's your analysis, right? Cool. But do you buy this? And you're like, well, I have a double bottom, or Wayne, I'm at support, or I'm near that monthly pivot, blah blah. Well, maybe after a breach. Okay. You got to know when to be conservative. You got to know when you should be aggressive. In my humble opinion, you should be conservative even as a bull that has all the permission in the world to do what a bull wants to do. That's okay. But not until the technical analysis confirms that you should be aggressive. I mean, you could take this, but you should be very, very cautious. You are a bull when bears are bullish. Doesn't mean you're going to make a lot of money. You need to be a bull when a bull is going to be bullish, and that's going to be over here. So you can you can conservatively enter this. By conservative, I mean maybe a smaller lot size, maybe half the lot size is normal, and then you move your stop, and then once you're up here, a conservative trader wouldn't say, oh, I think we'll break this and go higher. No, a conservative trader say, well, that's hardcore resistance and it's probably going to hold. And if it's going to hold, that's going to really set up a lower high, lower low scenario. So maybe I should take my profit here and then look for a double bottom and then not get aggressive until I'm above that price. And I would say, well, I like that much better than, bet the farm here. Okay. I'd rather see you wait for, or take a small shot here, take a small shot here, and then be much more aggressive after the higher high, higher low scenario. Okay? I want you to not just have technical analysis or just have fundamental analysis, or even worse, trade your opinion. Oh my gosh, trade your opinion. I said bias, not opinion. Bias means you're using fundamental and technical analysis. You can't be a bull on this until it starts the market, until the candles start coming bullish. So even this isn't really truly bullish because you still haven't even made a higher high. All you've done is higher low. Okay? So there's a time to be aggressive and a time to not be aggressive, and then there's a time to wait. Okay? So for example, do you think somebody was front running early in the month? Yes. Whoever sold that was thinking this, and they're going here. So I'd hate you to bet the farm somewhere in the middle of this move. Look at this. You're almost like 50% of the move. So you say, yeah, it might go up, but it'll probably still go down. Okay? And you say, well, I got my M3, Wayne. Oh, good. Good for you. Congratulations. That's where you would expect a reversal to take place from a bearish move to a bullish move. Good. Now, you got your price. Great. You don't trade that. What do you trade? Technical analysis. So what's the next thing? What would make this bullish? So you want to be a bull at the M3 when the market's bullish, not when the market's bearish. Okay? So that's where double bottoms, higher highs and higher lows come in. That's called technical analysis, confirming your bias. So much better than a bet, a gut feeling, or an opinion. Right? And he's passed it. Level 3 International Wealth and Investment Management. Very cool, Anise. International Wealth and Investment Management. Very interesting. Very, very interesting. I'll have to look that up somewhere. That's really cool, man. Congratulations, Anise. Are you going to manage other people's money in the Middle East? What are the levels? I'm using pivot points. On here, on this chart, you see monthly pivot points and weekly pivot points. Okay, just looking here. Euro dollar. So I just have euro dollar trapped here. I don't really know what to think. Right? So I see higher lows and lower highs. That tells me just wait, or skip it, actually. Gold, I tell you, gold. Oh, gold looks interesting down here. See, I still want that because I want a weak dollar, right? Yeah, you entered a chartered wealth management qualification. This is level 7. Oh, sounds high. Managing level 3 at best. We're good for advisor. Chartered wealth manager. Very interesting. Very interesting. Yeah, they don't have that in the US, so I'm not familiar with it, but it sounds very interesting. Well, the next time I'm in Dubai, we should get together. I have a feeling I'll be there in the next 12 months. So hard, though, because there's all these things I want to do, and then I think, oh, my God, I bet I got Harvard. The wife and kids were complaining, even though I just took them on a vacation. They're like, we've never had a real vacation with you, Dad. I'm like, come on, I've taken you everywhere. I took you on the Disney cruise. And they're like, that was like 10 years ago, Dad. I'm like, oh, okay. Well, why don't we ever go? Someone says, why don't we ever go camping anymore? My wife says, well, your father's in grad school, so we've lost all our summers. I'm like, oh, my God. Thanks, everybody. So, yeah, so I think, well, I'm in Cambridge for all of the summer. So when am I going to get to Dubai, right? Yeah, but we'll see. I'm going to try to squeeze a trip in there. Yeah, I hope you're okay with the cigar bar in the marina across from the Ritz-Carlton. I love hanging out there. It's the best car show in the world. So anyways. So gold, yeah, so anyways, there. Oil, we did. It's a little elevated. You can be a bear on the short term, but bull on the longer term. So I was trying to, and I said this in the swing trading group too. I posted a video last night while the Super Bowl was going on because I just got back from vacation. And then I got to do my analysis, and that in the middle of the Super Bowl. But that's what you have to do. Even the Super Bowl is not going to take me away from my job. So in that video, I was talking about like things like, look, you got to be careful. This is very, very bearish, and yet there's still lots of bullishness. Pick your lines, pick your stance, right? Be open-minded. And there were a lot of things too that looked like they were going to be very bearish. And then you open up something else. So I can't remember what it was, like Aussie dollar and like USD CAD, I think it was. Both said down. Well, how can they both be down? You see what I mean? One of them's wrong, or they're both right, different time frames. And so when you see stuff like that, when you don't see the congruency, now remember the numerator and denominators are flipped, which means if there's congruency, they should be doing the opposite. If Aussie USD is going down, then USD CAD should be going up. But if they both say down, there's a warning sign. And that's where you say, look, I have my bias. I might be a very, very bullish, a very, very bearish, right? But you should recognize as an analyst, first and foremost, you say, oh, that's interesting. I need to dial back my aggressiveness. I should be conservative on this one because if I'm, let's say, a bear on US dollar, I want Aussie dollar to go up and I want USD CAD to go down. So therefore, if USD CAD says down, I should sell that one first because that fits my current bias. But if it fails, then at least on the short term, I need to take my profit there and then flip over and buy the Aussie USD and sell the Aussie USD and take advantage of that technical move, even though it doesn't fundamentally agree with my bias, and pick up some pennies while I wait for the market to reset, if you will. Okay. I guess that's fine. Let's just look at the ends. I think we kind of pulled that apart. Okay. So I'm still a bull. But a scenario like this tells me it's going to hit the target early and then probably come back. So this tells me profit taking probably in the next day. Okay. If we find ourselves up here tomorrow, let's say, or maybe even Wednesday, I have to get out. Remember, this is the one where I bought it here and I mismanaged my stop. For some reason, I moved it. I think maybe I must have accidentally bumped it while I was coaching or something. I don't know why I moved, why I'm not in this anymore. I got knocked out in here. So I bought it here. I don't know why I'm not in it now. So there must have been a glitch in the matrix. But anyways, as far as management's concerned, the way that this opened up, it tells me we're going to hit this early in the week and I need to take my profit. Okay. Okay. Here we are. This is the same trade basically as the CAD yen. Okay. But anyways, up, 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 down, down, up, 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 buy. You can see the beautiful roll reversal. My stop's at break even, so I can't lose any money. Great. And do I take profit? Well, we're still above here. So as long as we're above this area, I'm fine. And on the 1 hour, we're kind of riding the 21 and kind of working our way up. Okay. Is it an out of position bull trade? Yeah, sort of, right? Let me kind of click in a couple here. So right now we're above the 4 hour 21, and it tells me that I should just be, let the trade do itself. So look at up, 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 down to the 21, buy. I'm riding the 21. Okay, it's likely to come back down, and the 21, it's not that it should hold it, it's just that I'm still aggressive if we're above this 21. And then tomorrow the 21 is going to be about here, which means we should be up here Tuesday or Wednesday. And because of the way that this week opened, I will take my profit, even though I didn't take profit last week. Probably tomorrow or Wednesday, we'll be up there around 76.5. And I'm in at 74.5. So I'll take my 200 pips profit and ish kaputya. What is my favorite pairs to trade? Well, because I'm primarily a macro trend trader, I like all dollar pairs, all yen pairs, and all Swissy pairs. Okay. The only question, being a macro trader, the only question I have to answer is, risk on or risk off. Once I've answered that question, I have, probably 15 trades I can consider. Okay. Pharaoh says, "Nice butt, Wayne." Oh, thank you very much. I've been working out, dude. Maybe it's all my surfing. All right, let's take a look at Aussie. I know what you meant, Pharaoh. Sorry, I meant by. Yeah, you don't like my butt? Is that what you're saying, Pharaoh? You don't like my butt? What do you know? All right, so anyways, support zone, cool, great. Right, great. Pull back, buy, nice. Easy, right? So there's where I'm long. By the end of last week, we're up here. It's elevated. We're near our target, but not out of control. Here's the front run buy, and we're still making a higher high above this area. So right now, I'm very in tune to the fact that this can come down. Okay? But I'm going to try to let it run the course up here. So again, it's sort of an out of position trade. Let me switch over to the 4H. Let me click in. Okay, and very similar to the other one, as long as I'm above this area here, I'm okay to just let it do its job, right? Below that, I'm going to be much more defensive, which means if I'm below that, I'll find myself near the 55. I'll let it rally back up, and I will take my profit. I'll probably get out here if it makes a lower low. Okay. But right now, because we're above this area, I'm going to let it run. And like I said, oops, that was supposed to be an arrow. Like I said, if we hit the target, certainly Tuesday. Wednesdays, I have to make judgment calls. And for that, I'm going to look at overlaps of pivot points and like where did we start. See, like as a bull, we're starting pretty high up. This is a bearish monthly zone. So I'm in tune with that, where we could have a situation where we're up here tomorrow, I take my profit, and then we find that this works its way back down for the rest of the month of February. Okay? Oh, Pharaoh doesn't know what a good butt on a man looks like? Okay. Yeah, that might make him gay, right? Whoa, whoa. Men are so funny. Come on, you know what a good-looking man looks like. It doesn't make you gay. Men are so funny. All right. I wanted to say something. I just sort of lost it there on the gay comment. I'm close to getting it back. It had to do with, oh, I know what it was. Okay. What was the basic assumption? Let me close this. Let me move this up, and then let's blank this. Come on. Okay. What was the basic assumption for January? Right, Pharaoh, this one. The basic assumption that we talked about in July was in the first and second week, the yen pairs were going to drop hard. Then there was going to be a false rally, right, starting in the third week. And then February would probably work its way back down, right? How many people concur with this? We'll call this 2 weeks down. Oops, 2 weeks down, We'll call this 2 weeks up, and then let's call it another 2 weeks down. How many people would concur? We talked about this in July. Don't we sound like doctors when we concur? All right, so where are we now? Well, we're kind of in here. And I'm long making money. This is the problem, right? So what do you do when you're long and making money? But like, should I ignore this, or should I be in tune to what my overall strategy is? Because let's be honest, a lot of you guys just forget. Right? You just forget. Even though we talk about it and talk about it and talk about it and talk about it, you see now all the end pairs up, and you're like, boom, I'm going to buy them all. Whoa, 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 whoa. That was very last week. No, I think it's do you concur, doctor? So last year you said down after January. Yes, right. Which is another way of saying in the first 2 weeks. Right? And very often it's even the last week of December. But the thing is, it comes down to logic. Let's do it this way. Logic. If you take profit in December, you pay taxes now. And in some cases, that is what you want. Like, for example, you can take profit in the stock market on just your losing trades. Now, of course, you lost money, but now you're booking that in the now. Okay? And you offset last year's profits, and you wash it out in your taxes. It's a wash trade. And then 2 days later, let's say, in January, so if January, you pay tax later. Not in 4 months, but in 16 months. So if you take profit in January, you pay tax later. So this logic can flip depending on the situation the market is in. So if you started with a big losing year and you want to show your customers, your clients, that you didn't have a losing year, you had a profit year, then you take profit on your winning trades in these so that you can say, all right, well, the first half was a horrible year, but we ended the year positive 2%, let's say, even though we were down 8%, right? In January, in February, March, April, May, June, July, August, September, we were down 8%, but we closed the year, right, up 2%. You're like, look, but you have to take that profit in December, and you're doing it so you can put it in your annual report that goes out to shareholders, or in this case, investors. You send it out, and you're like, look, things are ugly in the market, but we ended the year positive. No redemptions, please. Which means that then in January, they're going to book all their losing trades that they held off, because if they'd taken all their trades off, then they might have actually ended negative, right? And they reverse wash it in that case. So and the market will move one way or the other based on that. Okay. What I'm trying to say is, it's not always the first week. Sometimes you do wait until after NFP, because traders, the market might be so good they might want to hang on one more time, or they want to get out so bad they need a buying market before they can sell, or whatever. Every year the conditions change, but the business cycle and the seasonality moderately changes. So for example, when is the monsoon season in India? I'm sure you can ask an Indian and they would know. What days is it going to rain? And how much is it going to rain on that day versus each individual day? And they're like, well, I wouldn't know that, but let's say, every, November to April or something is monsoon season. I don't know when it is. But let's say they're like, yeah, it's those months. Happens every year. I'm like, okay, well, what days is it going to rain? What day will be the heaviest rain? What will be moderate and what will be light rain? And what days in between will not have any rain at all? And they're going to say, well, I can't tell you that. I don't know that. Well, same thing, like the monsoon season, I know when institutional investors are going to take profit and loss and put it on their books. And that will affect the market. But what specific days and what is the reasoning behind it? Are they taking profit or are they taking losses? And in what order and why and when, on what day and what not. So what I say it's something like this. In January, the yen pairs are going to come down in the first 2 weeks. Then they're going to go up for 2 weeks in a false rally, and then we'll continue back down in the original direction that we started. You see what I mean? So, yes or no? In the first week, did it fall? Or in the first 2 weeks, did it fall? Yes, and hard. In the second 2 weeks, did it rise? Yes, and hard. So what's going to happen now? Well, it might continue going up, but very often it has quite the propensity to maybe come back down. We don't know. Should you be open-minded, or should you just say, you know what, there's no way in hell that's going to happen, so this is just up forever. Okay? So I hope that was a helpful analogy. You should understand the seasonality, but it doesn't put you into a trade, but it should prevent you from ignorance. Right? It prevents you from buying a house in a swampy area right before the rainy season. You're like, oh, well, the house looks dry now. Uh-huh. It's going to rain, and it's going to get messy. It do. Thank you, Ace. Coolio. Pound yen, aye. So what's the basics? Okay, simple things. We know this is a buy zone. If you're a bull. And what's the general trend here? For 2 weeks it was up and 1 week it was down. Okay. You could fib that. That's one thing you could do. Okay. So you're like, oh, it's a 382. And this might act as a role reversal. Okay. And then you zoom in a little more. And you could say it created a higher high, higher low, and it dropped down in here, and it opened in the buy zone. So right around the start of the Super Bowl, you would have been buying this dip. Okay. There's even a 2155 cross preceding it. So you'd say, the way to describe this, you'd say, on a 1 hour chart, the pound yen is technically bullish. So you buy dips. Okay. What if you're a bear? You're going to say papikash. So here's the problem. This doesn't tell you to be a bull or a bear. You have to do your own analysis fundamentally and decide, or on a daily chart or something, to decide whether you're a bull or a bear. This doesn't tell you that. You have to already have done your analysis. So if you did your analysis of the daily chart, of the fundamentals of Brexit, of the fundamentals of yen and seasonality and business cycles and blah, 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 you would say, oh, I'm a bear. Cool. Where would you like to be a bear? The 618 Fibonacci retracement looks tight. That's like bananas. Okay? Where's the sell zone for swing traders? Yeah, right there. Just trying to get it perfect, right? No, now I can't get it perfect. Oh, it's up here. Okay, so there's the sell zone. Let's mark this up. Here's the weekly sell zone. And here's the exact price a monthly bear would swing trade short. And both of these are 618 Fibonacci retracement of this high, right? Which, remember, it fell for a week. So there could be bears here. And where would a bear sell? Well, this is really the last good place to sell. The next plan B would be to sell the double top on 100% retracement. Okay. So now you might say, oh, that's now, yeah, like I might have done it first and showed you all of this, and you're like, oh my God, I should be a bull. And then I do my analysis, and you look at this, and you're like, oh my God, I should be a bear. If you're having that problem, it's because you're not doing your analysis. Okay. Okay. And none of this should convince you one way or the other. You should have already had your opinion. And that I'm not going to do for you. If you need to make the decision of whether you're a bull or a bear. Okay? Okay. Once you've made that, it's easy. It's one or the other. One of them you're going to trade, and the other one you're going to be concerned about for profit taking. Okay? Should be easy and straightforward if you have a bias. Yeah, but you should know. You should have already thought about this for weeks and weeks and weeks. What you're going to do, are you a bull on the pound? Are you a bear on the pound, for example? How do you feel about Brexit? What would you advise your clients? How should you be making money? Should you be buying the pound on people freaking out too much? Or should you be selling on the pound about real economic concerns? For example, Nissan just pulled a big project out of the UK, and I think another car company pulled a big project out of the UK specifically because of Brexit. So now like 1,000 Brits are going to be out of work or didn't get the job, right? Conrad Cox says, does Traders Way give you 1,000-to-1 leverage on your account with them? You know, I don't know, but somebody brought that up the other day, like I think on non-farm payrolls. So I honestly don't know because I've never used 1,000-to-1 leverage. So I don't know. Seems like if that's what you want, they would probably give it to you. The problem is, what I would recommend is that you save money, get a second job, and build up your assets under management. Okay, and then ask yourself this, Conrad. If you traded conservatively with discipline and patience and spent time like reading and practicing trade planning and stuff, do you think you would be a better trader 5 years from now than you are today? And the second thing is, so if you basically suck now as a trader, why would you increase the amount you suck? You see what I mean? Like the more you have leverage, it multiplies what you do. So if you suck now and you move your leverage from let's say 100 to 1 to 1,000 to 1, you suck 10 times more than you used to, right? Like you think I'm suck now? Wait till you see how I trade with 1,000 to 1. You know, like it doesn't make any sense to me, right? So, but you can do whatever you want. It's between you, your accountant, and God. Like, if that's what you need, that's what you need. And most likely they'll say yes, but I don't know. That's not my job. But what I'd rather you do is take the long-term approach. So what if you decide to go to Harvard, but you don't have the money it takes to go to Harvard? Should you take a student loan? And for most people, like, oh my God, without a doubt, take the student loan. Okay, great. So now you have the student loan, which is a form of leverage. So now you have to work your butt off. And I'm telling you, work your butt off. Work your butt off. Oh my gosh. But you know, at the end of 4 years, you might graduate. It's not even guaranteed. But you're going to have to pay your debt, no matter whether you graduate or not. Okay? But once you graduate, then maybe you're qualified to do a job. And that job better pay enough to pay off your debts, your form of leverage. Well, what if you took trading that serious? What if you took 4 years of extremely hard work, focus, and dedication and sacrifice, where all you did with day and night was study Forex? And I mean day and night, like I mean 70 or 80 hours a week. More than a full-time job. You've done 8 hours before the average person even wakes up. Okay? Cool. And in 4 years, you haven't made a penny. But now the games begin. Now you have the opportunity to try to earn. But here's the funny thing. Most people, and this might be you, I don't know. Most people are like, Wayne, I will not, and I cannot, and I will not work my butt off for 4 years straight. I have to make money now. I need to make money fast. I need to get rich quick. But when you actually think of it, it makes no intellectual sense whatsoever. Maybe emotionally it makes sense, but intellectually it's like, wait, you're going to beat institutional investors and hedge fund managers and central bankers and CFOs? You're going to beat them? You're going to be smarter than them, even though they have way more money and way more education and way more experience and way more research? Like, you're going to just walk into this and whip their ass and make quick money and buy yourself a yellow Lamborghini? Like what planet are you from? There's like no way you can beat me. If it was you and me trading against each other, there's just no way. I don't mean everybody. I mean the average person that comes in with that. Now, there's half of you guys are probably better traders than me. I don't know. I've been teaching you for a very long time. You're probably wicked smart. But think about it like Harvard. Like everyone that goes to Harvard, you have to sign up for a minimum of 4 years, and it's going to take a lot of sacrifice and investment. And even then, when you're done, you still won't make any money. But you'll be smart and you'll be respected and you'll have skills. You'll be qualified for a job. Well, what if you're qualified for a job ends up being attracting investors who invest into your successful Forex trading career? Now what are you worth? Right? Right, Peter. Peter's one of the guys that's got it. Peter Ward's one of the guys that's got it. He's made those types of sacrifices. He will be successful. Like Is, another person, right? Who's willing to put all that in and do things like, right, like get the education, build the track record, get the resume going, get the certifications. So at one time they could sit down with a millionaire or a billionaire and say, check me out, I'm worth investing in. And they look at it and they're like, yes, I think you are worth investing in. And you got it. So I look at it like, look, it's only 4 years. I told my wife that too. And even my kids, I sat them around and like, I have an opportunity to go to Harvard. I'm going to have to work very, very hard day and night for 4 years. This includes me moving to Cambridge every year in the summer and be away from you guys, like literally moving there. And you can't come. And this is going to be hard and it's going to be expensive and we're all going to make sacrifices. My wife makes unbelievable sacrifices for me so I can do this. And then my kids, how come we don't go camping anymore, Daddy? Oh, well, I'm in grad school. So everyone's making sacrifices, right? But is it worth it? And the way I explain it to the kids and the children, it's only 4 years. 10, 15, 20 years from now, we'll just remember it as that period. Oh, yeah, when Daddy was in grad school. It's only 4 years, guys, of working your ass off day and night, sacrificing and pain and suffering. It's only 4 years. But imagine that 4 years, you're building a track record of success. You're investing into your education. You're investing into building a track record, something that's marketable. Hey, potential investor, look at me. This is what I can do. This is what I did over the course of years of market conditions changing, and before Brexit and after Brexit and before this collapse and after that collapse and this tragedy and that tragedy, this boom and that bust. Through all of that, over the last 4 years, my returns remained steady and consistent because I'm patient and disciplined. I'm not over leveraged. My lot sizes are low relative to the account size. I'm trading business cycles. I'm trading seasonality. I'm trading this and that. And because of that, I'm very, very, very consistent because I plan my trades ahead. Because I understand macroeconomics, because I understand central banking, because I understand how the global economy works. But on top of that, I can plan. I know when my plans fail. I know when my plans are succeeding. I can look at a chart and tell you, should I be aggressive? Should I be conservative? Should I not be in this market at all? Dude, it's only 4 years. It's only 4 years to develop that kind of patience and discipline and skill and track record, right? I'd look at it like if you want to become a millionaire, let's say, if that's your goal, just to build the base to become a millionaire is only 4 years. Well, what's the base to become a brain surgeon? 4 years, and then medical school. You have to work for 4 years just to get to medical school. Then you're in medical school, and then you got your residency, and then you're like, dude, it's going to take 10 or 12 years before your scalpel even, or your saw even cuts through a skull. You're not even going to see a real brain for 12 years. So you want your yellow Lambo? I'll say, you know what? I swear to God, you can drive a yellow Lamborghini if that's important to you. It might take you 8 years, though. Are you okay with that? Because you need 4 years to develop skills, and then now you need another 4 years to increase your assets under management. Chuck says at least 10. Yeah, or 10. It's a 10. So what? What are you, 90? Where were you when you were 12, right? The way I look at it, especially as, like, think about like Silicon Valley entrepreneurs. Lots of people move to the Silicon Valley just to get filthy, stinking rich. I want to start a startup. I want to be a high-tech startup CEO. How many kids have you seen? They're like 30 years old and they give you a business card and it says president. It says founder, president, and CEO. And you're like, don't forget janitor, right? Shows you where they are in their mind. Are they building a technology that will revolutionize the world? Or are they trying to get rich on stock options in an IPO? And look, those kids don't make it. Well, some do, but generally not. because it's way too difficult. Oh, did you go to MIT and get an engineering degree? Or maybe Stanford? Oh, you don't have an engineering degree? So how can I trust that you understand the technology enough to revolutionize the world? Because remember, you're not going to revolutionize the world unless the 500 million engineers around the world from all cultures around the world that are high-tech engineers, somehow they missed this thing that you see. How did they all miss it and you see it? And right? So anyways, whatever. Let's get off this. Get really good. And do you need 1,000-to-1 leverage? No. 100-to-1 leverage is way more than enough. So what I would focus on is open up a demo account with Trader's Way and think about in 4 years how good you're going to be if you work your ass off day and night for the next 4 years to get really, really good as a trader. And along the way, you might have to invest into education and training and coaching. That's fine too. You don't have to. It just speeds things up. That's all. Okay? But imagine how good you'll be even if you just attend these webinars for 4 years compared to what you are now, and in 4 years from now, how much better you'll be then. And along the way, try to save money. Take a second job. What do you care? Right? Cool. Save your money. Get a second job. Quit your whining. Get a second job. Work weekends. So what? It's part of the sacrifice. That's what you got to do. And in 4 years, now you have some assets under management. You have real skills. Now you can begin day one as a real currency trader. You press buy, money goes into the market. Okay. Bernard says, I need a contact number to call Trader's Way. Cool. Did you try the website? Try there. Yeah, Zamo's like, you're very right. The problem is we get into trading for the wrong reasons. And that, but I have to reprogram your brain. If I'm going to do my job correctly, I have to fix that. So I think in the very beginning of my book, which I wrote a million years ago, I even talk about that. Like the common denominator we all have here is that we're entrepreneurial in some way. Because if you told somebody, hey, there's this thing called Forex, 94% of people fail at it. Do you want to try? And for some reason, you're like, okay, yeah, but a normal person would say no, right? So like we have this entrepreneurialism, but we have to learn how to control it, because where we come from, entrepreneurialism is sort of risk-taking. There's no risk-taking in financial markets. It's about risk management. So you have to learn how to manage risk properly. And this whole idea, like, you don't know what the hell you're doing, but you're going to come in here and get rich, that's just immaturity. Right? That's just immaturity. You're just immature. Whether you're 50 years old or 15 years old, it makes no sense to say you can come into a market with professional traders and get rich quick. It doesn't happen. It's just, it's not logical. So, but can you think of any other situation you could put yourself in where you have access to $5 trillion a day? What kind of industry? So let's say you go to the Silicon Valley, because I lived in the Silicon Valley, right? I was a high-tech entrepreneur. I knew hundreds of entrepreneurs. Hundreds of the good ones. I was there during the entrepreneurial renaissance. I had a team of dozens and dozens of venture capitalists that I worked with. I could call the most powerful firms, just pick up the phone and they'd take my call. I knew these guys, right? But it wasn't a place you could just walk in, throw down a business plan, and you're a billionaire. That's what gets the articles and stuff, but that's not really how it worked. So let's take this seriously. Okay? Now, let's say you could do that. You walked into Silicon Valley. and you somehow knew all the best venture capitalists, and you could, on the back of a cocktail napkin, write a business plan. I need $100 million. And let's say they gave it to you. You see how illogical this sounds? But somehow a lot of people are magnifying Forex even beyond that. But what I'm telling you is stupid, right? You just show up to the Silicon Valley. You don't have an engineering degree. But somehow you can call up the most powerful venture capitalists, sit down with them, and you write out a business plan right there in front of them on the back of a cocktail napkin and say, I would like $100 million. And they're like, you know what? You're right. Boom, $100 million. Great. So now you have $100 million. Are you accessing a $5 trillion a day market? What about a $5 trillion a month market? Or what about a $5 trillion a year market? Like, it's such a big number. When I read it, back then it was $2 trillion a day. The reason I got into Forex is I read that and I said, that is stupid. $2 trillion a day. There isn't even $2 trillion in the world. Like, to me, it was so stupid. There's no way 2 trillion, because I'm looking at $100 million a year markets. If I invested in this product, just the market, not how much the product's going to make, or I'm going to make the entire market. Is it worth 100 million? Is it worth $1 billion? So 2 trillion a day, I'm like, that is stupid. Now I look it up. Oh my God. I can quit being a venture capitalist. I can quit looking for $1 billion markets and $100 million markets. I can quit and just go over here and access $2 trillion a day. So I quit. That is amazing. So you have access to $5 trillion a day market now. It's floating back and forth over the internet from one bank to another, from one country to another. And you have access to tap into it. And every once in a while, like, oh, that's mine. Oh, that's mine. Here comes some money. Yo, that's mine, right? You want to throw it away on some, like, get rich quick thing? It's so illogical. I can't believe people still think that way. So it must be immaturity. So if we can mature you and get your mind thinking properly, like, all you have to do is start a business. And this business will take investment of blood, sweat, and tears for years. And over that amount of time, you will build a true successful business with a track record so that you could go and raise money. Now, it's kind of like, going back to the startup thing, it's kind of like building a prototype of your new technology, and now you have something that works. And then you go out to some potential customers and say, I have a prototype, and I can see how it would fit in your business. Would you like to use it for a couple of years for free? And get them to use it and try it. And then they'll give you feedback. And you're like, oh, they say, tweak this and tweak that, and this should be better, and you should get rid of that. So you get your second prototype, and then your third prototype, and then your fourth prototype, and now you're in beta, because now your prototype's pretty good, and you got referenceable customers. And meanwhile, you went from your first trial customers to some pretty significant players in the market are now using your tool. They're not paying you. It's still free, and every time you update from prototype 3 to prototype 4, it's more of your money and it's more of your time, but you're getting more and more people using it. And then you go to the Silicon Valley and you're like, dude, these 5 giant companies are using my technology in my beta, and these other ones used my alphas. So there's like over 12 customers, and they've been using them for years, and they like them. So if I had $100 million, I could get this into the marketplace to everybody. And you know what? Here's my business plan. Here's the people I know. And these customers told me they would help me get into these other customers of theirs. All I need is $100 million. And then they're like, you know what? I think we should structure something for you because it looks like you have a business worth investing into. That's called sanity. Take that and apply that to Forex. You learn how to trade, you learn macroeconomics, you learn central banking policy, you learn technical analysis, and you learn that just makes you an analyst. And then on top of that, you know how to be a trader, which means you don't just look at what's happened, but you can do projections in the future and then set up trades to enter into those projections, which means you have trade plans. That's all a trade plan is your projection for the near future and your ability to carry it out and make money. And you show that over the course of time. Markets change. This becomes bullish. That becomes bearish, and then bullish again. And Brexit comes in. That was unplanned, and that was a thing, and here's a new thing, and there's another thing. Meanwhile, you can consistently, conservatively navigate through these problems. And now you have a skill a client will pay you money for. That's called a business. And you can do it in less than 4 years. Do you need a Harvard degree? No. Then how hard could it possibly be? You know what I mean? Yeah, trillion's a big number. Nobody cares who your daddy is. Nobody cares what neighborhood you live in. You got a laptop and an internet connection, you can access $5 trillion a day market. What are you going to do about it? Dream about yellow Lamborghinis? That's childish. Build a business that you can market and attract investors and money with, and then provide it as a service where you actually trade conservatively other people's money and you have consistent returns with low volatility. They will pay you for that service. And you can just do that every day the rest of your life and be happy that all you have to do is read central bank reports and smoke cigars on the weekend. Or during the Super Bowl, do a quick check as the market opens. What? That bothers you? Okay? As Raymond says, I love this business. I love this business too. That's why I quit being a venture capitalist. Like, why am I pissing around with $1 billion market opportunity when I can have a $5 trillion a day market right now, and all I have to do is figure out how to buy, how to sell, or do nothing. I knew nothing about macroeconomics. I knew nothing about technical analysis. I never traded a stock before. I was a venture capitalist. Why would I want stock? Why would I want to buy a stock for $50 when a venture capitalist paid 5 cents for the same stock? Like, I wasn't a trader before. I walked in as much as a sort of a financial market virgin as you could possibly be. The only stock I owned at the time was I bought Apple at $6 a share, and I had Cisco Systems at $12 a share or something. But that's only because I worked at those companies. Those are the two. That was my stock portfolio. So everything I learned through Forex. And I think you can take everything I learned, let's say in my first 10 years, I think you can learn probably in the first 2 or 3 years. And that's the kind of leverage you need. Not 1,000 to 1 leverage on turning your $100 into $1,000 or 10,000 or whatever ridiculous it is. But you can leverage up 1,000 to 1 on knowledge. And that's what's going to carry. And that's why I do these webinars. There wasn't anyone to learn from when I started. What skills did you have as a VC that were applicable to me in Forex? I can't think of anyone directly, right? But I was really good at asking questions. The number one skill I think I had as a venture capitalist was asking a lot of questions. I could sit down with a patent out any type of technology you can imagine and very quickly become pretty knowledgeable by asking the right questions. Okay. So, I don't know. I would say things like hard work ethic, maybe. How about that? That's probably the best thing. Work ethic. I'd be calling my entrepreneurs on the drive home from the office. On the weekends, I'm calling my entrepreneurs. Like, I've been thinking about your patent. I've been thinking about your prototype. Why do you do it this way? And why did you do the hinges that way? And why did you do it that way? I couldn't shut it off. I was fine financially, Pharaoh. Yeah. All right. Anyways, so I don't know. Sorry, I think I went on way too long. I apologize for that, guys. But when somebody asks me about 1,001, yeah, you can have it, but I offer you 1,001 leverage on intellect. But Trader's Way, I don't know. I honestly don't know. Apparently so, but I don't know. But regardless of whether Trader's Way will give you 1,001 leverage on your money, that may be true. But I offer you every day 1,001 leverage on intellect and experience. And I think that's going to put you on the right path a lot more than no skill, no education, no knowledge, and then leverage that up 1,000 to 1. Like I said, if you're new, you probably suck. So sucking 1,000 times more is not helpful, right? But people make this mistake all the time. How about this? Deutsche Bank and Commerzbank, the two largest banks in Germany, are about to go bankrupt. Deutsche Bank's been bankrupt for years, and I have some stories I can't tell you, but boy, has it been in trouble a long time. So what will the Germans do to fix this problem? They're going to take two crappy banks that are completely mismanaged, and they're going to join them together to make it one crappy bank, because that's going to solve their problems. Well, that doesn't make sense, right? So they're leveraging up on stupidity. Doesn't make any sense. But there you go. Let's be smarter than that. Okay? Leverage up on knowledge, level up on skills like patience and discipline and work ethic. And I'll see you in 4 years from now. You're going to be a kick butt trader. And you'll be able to attract wealth to your service that you offer. That's your trading, whether it's truly hedging. Maybe it's your macroeconomic outlook that people pay for. Maybe it's money management, but they'll pay you for that service. Okay? Because not only are you qualified, but you're good looking. You got to have a nice butt to do this job, right, Pharaoh? Anyways, gotta go. Sorry for yapping. I will see you tomorrow. Thank you very much for being a client to Trader's Way. Visit tradersway.com. Thank them. Get involved with them. Imagining you're getting this education for free because they care about you. Thank you for being a part of YouTube and my YouTube community. I really, really appreciate you being here with me every single day. I look forward to my time with you every single day. So thank you very much for being on my team. And the loyalty and respect and the likes and the comments and stuff. And without further ado, please subscribe if you're new, and you will get alerts to the new video. So I will see you tomorrow. Peace on earth. May the pips be with you. May your profits be above average. Cheers.